All right. So yeah, now we're good. So when we look for price action trades with Ichimoku, the first thing that you want to look for is a bullish or bearish TK crossover. So for instance, we're going to focus on this area first. So we have a bullish TK crossover right here. The next thing you're going to look for is if price is above or below the Kumo. So you wouldn't take the trade here because price is not above the Kumo. So here is where price is above the Kumo. All right, so we have that. We had a breakout there, but we're not looking to trade there. All right, because that's not a level of support or resistance. All right, so where you want to look for your trade is at the support and resistance, which is your Tinkinson, which is the red line, your Kijun, the blue line, or the Kumo, which is the cloud. So since we're above, we're looking for a bullish scenario. So right here, we have a bullish engulfing candle. So right there, that's our level that we're looking to take a trade at. All right. So it followed all the rules right here. We had our bullish CK crossover. That's one. Price was above the cloud. And we look for an area of support, which is or support or resistance. In this case, it's support since we're above the cloud. The Tinkinson and the Kumo itself is acting as a support level. So we're looking to take a trade right here. So what we're gonna do, put our entry slightly above the the candlestick right here. You want to go at least you could say between 3 to 5 pips. If not, you could put it just right above the wick, and wait till it enters you into the market. Stop loss, you could put it underneath the candlestick, underneath the Kumo, or underneath the Kijun. All right, so you got different levels and different layers of where you can put your stop loss. So right here, here, or here, and if you want to, you could put it down way here, that way down here, because it's the next level down. So you have areas where you could play with support and resistance, or I mean, putting your stop loss. So after you found that out, you want to wait until it triggers you in. So you wait, and then you got triggered in on this candle, and you see momentum starting to pick up, and then you see prices still moving to the upside. Now another place that you can look for, uh, price action, you're just trading bounces off the Kijun or the Kijun or the Tinkinson here. So here we have price action again. We had a piercing line formation. So piercing line candlestick is, if y'all don't remember, a piercing line candlestick is when the previous candle is bearish, and then the next candle is bullish and exceeds at least 50% or more, then it's not going to be engulfing, but it's going to be 50 to 60% of the previous candle. So we see here. So how we enter this, you could once again put your entry right above this wick, or you could put it right above the open of the previous candle, which would be right here. All right. So this will be your entry. You see, you get triggered in on this next candle. You're writing this up. Once again, we have another area where we could enter into the market. Boom, right there. So what is this candle? Anybody want to answer?
Looks like a bullish engulfing, if I'm right, or I can't tell by your colors.
Yeah,
Forgetting they changed one.
that's a bullish engulfing candle. So right there, put our entry right above the wick. Stop loss right here or here. When you see that this is getting further apart, you might want to keep your stop loss a little bit tight. So this is where we have our stop loss. So now we see where our stop loss is. Let's see. We see that it triggered us in right here. We caught some profit, but we see that it moved back down. But as long as we're still above the Tinkinson, the Kijun, and the Kumo, we're still bullish. And look again, we have another bullish engulfing candle right here. So there's another entry right here. Triggered us in. We're just letting the market do its thing. Boom, another bullish engulfing. Took that up right here, bullish engulfing. Engulf this one. Could have put your entry here. See the market move sideways, and then look, kept on riding it up. As long as we're riding on this Tinkerson, we're still bullish. And as long as we're above this cloud, we're still bullish and looking for bullish opportunities. So you could have literally taken, caught trades all the way up until this point just by catching the bounces or the breaks of the Tinkerson, the Kumo, the Kijun, wherever you're looking. Right here was a really solid example. It was a Kijun break, the Tinkerson breakout. Right here, solid entry right there. If you had momentum, which we did, about right there, we could have caught that whole trade all the way up. We probably could have caught this whole thing. As notice here, price never went below the Kijun until up here. And then you could have got out right here anyway because we had a bearish TK crossover. So from this point, so you don't exit your trade from this point all the way to really over here. So this is where you exit you exit your trade right there. And if you had taken that trade, how much percent would you have taken, or how many pips is that? So this is oil, and that's 18% on oil, about right there. And you move the decimal two spaces over, that's 996 pips. So that's a solid trade right there on oil. So that's how you trade price action using Ichimoku. It's very simple. It's not too complicated. It's very straightforward. I know a lot of people think that trading Ichimoku is, a pain, but it's not really that bad. As long as you know what you're doing and knowing what to look for and when to look for it, you'll have solid opportunities and solid trade setups. It's the fact is, just waiting on them. And if you could catch a trend like this, then you'll be eating for quite a long time. You could hold one position for literally until it tells you to exit. So let me show you, and I'll remove. Actually, no, I'm actually going to remove a few things, but I want to show you guys something important. I'm gonna take the cloud off so y'all could really see when to enter or when to how long to hold the trade for. Let's take that off too. So if you catch a good solid trend, you had your bullish TK crossover right here. All right. So at this point, you're looking for bullish trades as long as it's above the cloud, but or above the Tinkerson as well. So at this point, you're still holding. You could hold this trade all the way to this point. The reason why you held the trade from this point to this point is because you never had a bearish TK crossover until this point. If you literally, if you like trust the system of Ichimoku, it tells you when to exit a trending market. This is when it told you to exit the market. You don't need to exit the market until you get that bearish TK crossover or until price crosses beneath the Kijun or the Tinkerson. Like you could have had your moments here where you could have taken profit and you could have got right back into the market. So yeah, you could have exited somewhere in here as well. But you don't really have to get out of the market until you see this right here. So right here, I'll make this green to enter the market. That's ugly green. This is entering the market. I'll make this red for exiting the market. So you're good here all the way up until this point. You could have caught that move, and you caught if you caught price action just trading just these two lines together, you could have caught it from here, that bullish engulfing candle, and caught this whole move all the way up until this point. So let's say if you did catch that 57% increase right there, that's that's a lot of pips. Yeah, that's 2,000 something pips there. And let's see if you have momentum. You did have momentum right here. The momentum started to shift right here too. So yeah, you could have definitely caught all that. Do y'all understand this at all? Is everything clear on this, or am I? Do I need to go over it again?
No, it makes sense.
Sweet. So if it makes sense, can I call you out and you can show me?
Here we go. Yep.
You noticed that was at election time last year, right?
I
And
believe
everything.
it was.
But they went crazy. Look at it. November 20.
All right.
Crazy.
Let's see. Uh, let's see. Since we're gonna have fun in class today, Greg, pick his chart.
Oh man,
pick any, pick anything for him, Greg.
it's
It could
taking a
be,
while.
it could be forex, stock, crypto. I don't care. He's gonna do it. He's gonna show us if he knows what he's talking about.
Moment of truth.
Moment of truth. Say again. You cut out for a second.
Let's do GA.
GA. Okay.
GBPAUD.
I don't even know what that is.
Hey, well, you're gonna find out in a second. All right. This is a tough one here. All right. I'm gonna give you the mouse. All right. Mouse and keyboard for you. You gonna tell me where you're gonna find a place to enter.
I already found it.
Oh, you already found it? All right, let's
Yep.
see. All right. Go ahead. You got the mouse and keyboard. Click on the screen and show me exactly where you would go in at. Go ahead.
I would have gone right in here after we had that cross, the bullish cross. I would have waited for it to go above the cloud, and once it made it above the cloud, I would have put in my long. Oh crap! What am I doing there? Put it right there, and once it would have triggered, I would have just rolled it up into here, where we had the initial cross, and just sold the. Oh, we didn't really have a crosser. I would have still taken profit up there.
Okay. Yeah, you could have. You honestly could have.
Just
Zoom
because
in.
it was already getting close.
Zoom
I don't know
in.
why. How do I zoom in?
You got a mouse. If you got a mouse, just rotate the little wheel.
Oh, no, I'm on my phone.
Oh, okay.
There we
No
go.
wonder. Okay, let me do this for you then. All right, so about right here.
Yeah, where we had that initial cross, I would have gone in. See,
All right.
right down here is where we had that
So-
cross.
Go ahead and circle exactly where you would gotten.
Right
Sir.
here.
Okay, go ahead. Go ahead.
And then I would have put my the breakout on the top. I would have
know
put
what?
my
Okay, okay. I don't know why, but it's either lagging or it's just not showing up on my end because it just now popped up something. So show me start off with the bullish TK crossover and go from there.
okay, so here's the bullish TK cross right there.
Right.
And Chico spans also. Can I zoom out? Oh man, this is
I see where it's at.
yeah. Well, it's above price, so I'm going in right there.
Okay.
Everything looks good. We're above the cloud. There's no issues. Just based on these indicators and these rows alone, I would have started my long there, and I probably would have held it right until. I mean, the only issue that I have right now, I would have probably tried to take in profit up here, just because we had. How do I go back to the right up here? Just because we already have we had a bullish engulfing, or we had a bullish and then we had a bearish engulfing. That would have already been like, maybe it's time to start getting out. Because we already had another issue over here too.
Okay, I see.
Okay. So we bounced off. So technically we did. I mean, we broke a little bit under, but we bounced off. But right there, as soon as we got that bullish engulfing, I probably would have just taken profit and waited to go back in and see if we would have bounced off the Kijun Sun.
Okay. You also know you could have look for a fractal bounce too, right?
I'm still not that good at those fractal bounces. I'm working on those.
Okay, fractal bounces are similar to the Kijun and Tinkinson bounce. Let me show you real quick. So so let's go back to when we get our first true fractal here. So let's rewind time real quick. Let's go here. So this is the initial candle that you said you would have got in on, right?
Yes.
So let's play it. We don't have a fractal yet. We don't have a fractal yet. Now we have a fractal. All right. So what we could do is once that fractal starts, let's automatically do this.
Okay.
Let's just do this for now. Just keep it there. So let's say we're still here. Price breaks above it, so you could put another entry there. We're still good. Now let's see. Okay, so now see how it's holding this area? How price came down. We're looking for price to bounce here. This is the fractal zone. All right. Look how it bounced off.
Mhm.
It also bounced off the Tinkinson, so that's double. So
That's a good
now,
sign.
mhm. So now we're still holding here, but this is our first fractal here. So we're expecting price to either, okay, and now you could even do this if you want to. Do this. So if the fractal, or if a price comes down and bounces here, we can look to trade up again. We're looking for the price to bounce off these areas now. So let's see. So we're looking for another bounce, potentially. It didn't happen. So now we have this fractal already marked up, right? So now that we have this fractal already marked up, we're looking for a bounce here because everything is still bullish. We got the bullish TK crossover, price above the cloud, and Chica spends free. So this is our area that we're looking for price to bounce. So if price fell through, let's say price fell through here. This is the next area we're going to look at for price to bounce. If we don't get
Yep.
our bounce here, we're going to expect our bounce to come here. All right. So once we see that, let's keep on playing. Ooh, we got a bounce there. We got a tweezer top. Oh, no, tweezer bottom. So now we can probably look for a trade to the upside there too as well. Bam, got
Ooh.
it. And we could have caught this and we could have taken profit right here if we wanted to because this is a daily candle. You don't want to get greedy. If you had taken a trade around here, you still would have caught 125 pips. That's pretty good profit right there for one day candle. Now, if you take your profit there, you do have the choice to either hold it or take your money. So if price does fall back down, we're looking for the same thing again, a bounce here, price to come down and bounce, or we're looking for price to fall down in here and bounce. All right, let's see what happens. Oh, we passed it. So we're probably looking for this area now. If we don't get that, we're just gonna play a Tinkerson break. But let's see what happens. Oh, so we're here now. We're right above this zone. So we're looking for a bounce here. Still looking for a bounce. Still looking for a bounce. Now we got it. So our entry would be somewhere here. Let me fix that. Entry right there. Stop loss right here. You can put your stop loss underneath this zone or underneath the key June just to give it some breathing space. So red is stop loss, green is entry. Let's see. So we're triggered into the trade now. We're still in the trade. We're not out of it. We're in profit a little bit. We're still good right there. And we just ride that market. All right. So this is how you play with these fractals. And let's say that okay, let's rewind just a tad bit. Let me show you something. Let's go back to here now. So let's say we do this now, because you could do this as well. Let's say we do this. Look at this fractal zone here. It's actually a big zone. I don't like that too much. So actually I'll do this right here. So we could do this now. We could look for price to bounce off here now, go higher, look for price to come down here, go higher, or look for price to come down here and go higher. All right. Let's see. So we're here now. We're in this area. Let's see if we get that. Nope. We're here now. Let's see if we get that. Nope. We're here now. Let's see if we get that. Oh yeah, we got it. So we're still good. Boom.
Mm.
So now we're back in here. So the question is, can we break this and go higher, or are we going to come back down? So let me do this. Let me extend this out. Extend that out. Extend that out. Extend this out. Let's see. So let's see what happens. Oh, we're right on the key June. So we're either gonna bounce on the key June and go up, or come to this fractal and go. Let's see. Oh, we're on the key June. So we're holding key June pretty well. So let's see that we may be able to get away with it. So let's put our entry right there, and let's move our stop loss right here. They got us.
The
They got
wick.
they got us right on point too. Oh man, dang, it's gone. It's gone.
I swear that's how my day's been the last couple times I traded. Say, oh man, I got it. Damn.
But you see, that's how you could trade it. I don't know what happened just now. I think I accidentally. Okay, so we're back here. So right here again, once again. See, it took us out of the market. They see, I'm telling you, they know. So if I had put it right there, we would have been safe. But you never know where to truly put your stop loss because they do hunt you out. And it like you could be like a great trader, does not matter. If they decide to get you, they will get you. Like it was a successful trade too, but we got knocked out of the market before things started going up in our favor. So it was still a win, but we had to take that loss because of the stop loss. So if we didn't get knocked out of the market, we're triggered in and we're going up. All right. Are we
So question.
understanding? Yeah, go ahead.
So question. Based on this stop loss hunting thing that I've been noticing too a lot on the charts, would it be safer to just go ahead and put your entry in at the bottom of that wick, or it's like kind of well, but you can't really guesstimate where that wick would be.
No, you can't guess where that wick is because it could be anywhere. Literally, it can be.
Or would you enter the market after you see that type of wick?
mm, okay, actually, that's a good question because that's price action. Now that I see what you're talking about. So let's go back to here. Remember how because we never had our bearish TK crossover, right?
Mm-mm.
So we could technically still jump into this market. Once you see this wick here, this is saying that bulls are heavy in this market right now because that's a strong case. You're drawing on the screen. This is a
Oh,
strong
sorry.
case for the market to go up. So this is actually price action right here. That's a hammer candlestick right there. The entry right there, right above it. So we went back. So this is how you would trade it at that point. So once you see that bullish candle, it's a hammer. It looks like it's about to cross here, but what's happening is we're starting to get bullish momentum. So this would now be our entry because we already know what's gonna happen. But just this, I'm just saying at this point, I'm gonna just show you how to trade it if you do see it like this. This will be your stop loss here, and that's how you trade this candlestick. I know it's a pretty big stop loss. You could even do it like halfway if you want to, but the proper way, quotation marks, the proper way to trade this candlestick is entry above the wick and stop loss at the bottom, the low. So once you get this is your the market. You have price action, and you have not only a fractal bounce, which is this fractal here. Actually, no. Actually, would be this fractal here, right there. So this is still considered this fractal because it never came to this fractal here. It got close to it though. So you can actually probably consider this fractal if you want to, because look, it almost got right there. So, and also you could also consider this a Kijun bounce and a Tinkerson bounce because it never closed underneath them. So you could call this a Kijun bounce here. So this is a level of support. So you're looking for the trade here. So once you saw that, you have this set up. You just take your trade and you're solid there. And you could have caught this at this point, 141 pips at the top, 108 pips right there. So this was a win. Now the question is, can you close? Can you go higher than this? Now, question to my students: would you hold this trade or would you close your positions? Ooh, I get scared when I ask y'all questions.
Now, based on Chiku's span and the Keeganson and Dickinson being pointing angled up and everything being angled up, I probably would have stayed in.
Okay, it's
Yeah,
fair.
I would hold this trade.
Okay, that's fair. Would you move your stop loss up or keep it where it is?
Oh, I'm moving that up. I'm
Moving
moving
it
it
up.
up.
Where you moving it up to?
Let me see.
I just want to hear where y'all both would move it to.
Maybe below Kitchenson.
Okay, right there.
Yeah, right there. That's you called it.
Okay, cool. If you also wanted to, you could put it just above break even as well, just to make sure you close with some profit. But for trading sake, we'll just move it here for not to give it some breathing room. Let's see. Oh, we're still moving up. We're good. We're good. And this is where the current market is. So would y'all still hold this trade where it's at, or would y'all take profit or move your stop loss up?
I'd be dumb.
Realistically, I would take profit just because it's already showing that they try to wake up and it's been rejected once, twice
Right.
from wherever it's trying to go. I can't even see the price range, but I would after this first one, like where even if I missed the whole day and I just logged back in and it was right where it's at right now, I would have just cut my losses there because it's showing that there's more seller pressure, more selling pressure.
Right. And the market's ranging.
Yeah,
So yeah,
you
take
gotta
your
create
profit.
another fractal and wait.
So what you could do, if you want to, you could hold this trade still. What you would do, move your stop loss right here. So now if it does go against you, you at least make 68 pip profit. And you could still manage to possibly still hold this trade because we're still bullish. We never had that TK crossover. We just know on the smaller time frame right in here, we're ranging. Because if we go to the 4 hour, we probably, or I think it's either the 4 hour or the 1 hour, you'll probably see Chiku Spend getting inside the price or already inside price. And yeah, Chiku Spend is inside price on the 4 hour, and it definitely is on the 1 hour. So whenever you see a ranging market like this, already know that on the lower time frame, Chiku Spend is in price. So now that you know this, you're still in this trade. You can still win or hold this trade. The point is you want to see if it's going to go higher now or if it's going to dump back down to the fractal level or back to the Tinkerson. So we're looking at this probably now. And this is actually a pretty big yeah, that's a pretty big range. I don't like that. So what you would probably do is look for a fractal bounce probably here and see if it goes up higher. Not this one because it's pretty much right there anyway. It could still go up there, but you're pretty much looking here to see if it goes higher. And you're trading just one time frame. You don't have to check like 1,000 charts just to see. I'm showing you how to trade on one time frame. Like you don't have to trade on another smaller time frame just because of this. You can literally trade the same time frame where you analyze. The smaller time frame is just to get in on a better the better entry. All right. So and you could do the same method on a smaller time frame. I'll show you in a second. But are we understanding this?
Yes.
All right, perfect. All right, I'm liking that. And Salvador, you passed.
Woohoo!
You got an A. Good job. All
Winning.
right, pick the next person.
Let's pick. Oh, Greg's on. Rita? I've never heard her talk.
Oh, she's not going to.
Oh.
Don't even try. Don't even.
Paul?
We
One of
love
the
this
Pauls?
reader though. Paul, are you up for
Yeah,
me?
Hey,
All right. Let's see.
Uh,
Let's see. Salvador, pick his chart for him. If he's stocks, forex, crypto, does not matter.
Let's do the DXY on the daily just to see if it can confirm what I'm looking at.
The what? Which one?
The DXY,
DXY.
the US dollar, basically.
Right. Dun, 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 dun. Okay. Well, we're gonna start off with the strategy, and then we're gonna go with analyze this. So, let's see. Let me give you the mouse. Oh man, Paul, you on your iPad and a computer or what?
yeah. Yeah, I got the computers. Just my name.
Okay, got you. So go ahead and click the screen. So first you got to identify the bullish TK crossover here because you're looking to go bullish.
Okay.
All right, so
Yeah.
we got that. Perfect. Next, you're going to look for price above the cloud. So where did price get above the cloud? The first initial, right.
Okay.
So right in here. So next, you're gonna find support or resistance. In this case, you're looking for support. So find the first support.
Okay.
Dun, dun, dun. You got this.
Let's see. Support. I'm looking at this fractal, the top of the Kumo.
Yes, sir. So draw a line right there.
Up
Let's
here.
see. Go over one. I don't know. Go over two spaces. Yeah, right there. Use that one. And draw a line right on that line that you see on the Kuma.
Okay. Right here on the.
Yeah, right there, right there. So now look over and see where you find the first candle that hits that area.
You mean the
Yes,
wicks down?
sir. Yes, sir.
Okay.
What is that price action right there? Yes or no?
That is, I believe, uh, this one here at this fractal.
Yes.
Um, yeah, I think it's a bullish, bull hammer.
Yes, sir. You're correct. So go ahead and put your entry and your stop loss on that candle.
Okay. All right. So wait, I can just do this. So I'm gonna put the entry on the top.
Yeah, entries on top and stop losses wherever you want to put it to breathe.
All right. And then, I'm not sure. I, whoops, I would probably, okay.
You trying to clone it?
Yeah. Yeah, I'm not sure
Okay.
what I did.
Let's see. Right click it. Here we go.
Of course, it put it right there. Yeah, I think I would probably go right here, but I don't really know.
You could
Oh,
do it.
okay. Or yeah, okay. Maybe the Kijinsen.
Yeah, the Kijun or the Tinkerson is where you would want to put it.
Okay, so all right.
So if you looked at the chart, which we're doing now, would your trade have been successful?
Yeah.
Yes, it would have. The reason why it would have been successful is because it triggered you in, never hit your stop loss, and it's riding on the Tinkinson. So where would your first area of take profit be on this chart if you were to take profit? Because there is one place where you could take profit for sure.
Well, I was thinking when fractals formed, taking a little bit of profit, but since there's no death cross, that's usually what I look for.
Right.
But yeah, I guess I would probably take some profit in here.
Okay, that's fair. I could take that.
But I would probably still be in the trade. Okay, well, okay, I see. So now we went below the Tinkinson, so
Right.
right there. Okay, so that's
Right.
where I would probably get out completely.
Right. Perfect. So yes, that's where you would want to look to get out. So let's
All right.
see. So good job. That's nice. If you
Cool.
had taken that, you would have got out like right here exactly, which is not like a huge gain, but that's still good though. Or you could have got out right here when you saw the market was starting to come underneath. But if you wanted to get out earlier than that, this candle here is a bearish engulfing, and this one is a bearish engulfing. If you zoom over, let's really look at this area. That's why you gotta get the whole, look at the whole chart, see what this area is. We notice that this is a strong area of resistance here. So really, could put a line here. Could also put a line. Let's see. Look for the lines here on Ichimoku, and also right here, right there. Reason why is because notice here, I want to teach y'all this secret too. It's not really a secret, but it's a technique that you can use. Notice you see these sharp spots on the Chiku span.
Mm-hmm.
You could use those as support and resistance levels too. So right here, you could put a stop loss, a level in here. If it's not sharp, if it looks like not like really sharp, like these, like it's really sharp, then don't bother with it. But right here is where you would want to put it. And you see that we're in a zone here. So this is letting you know that we may reverse here. So other than that, good job, Paul. You did good on this one.
Well, I noticed on.
Go ahead.
Sorry. Well, talking about the sharp points and the rounded points, I noticed that was the. I'm still not good on divergence, but looking at the hidden versus irregular divergence, I think the hidden was the rounded off corners, and the regular divergence was the sharp points, right? So is that are they related?
I never looked at divergence with this thing before, so I can't
Well,
even do that. But you
maybe
probably
not.
could find some.
I mean, just in general, just looking at your divergence chart, looking at the hidden versus the regular divergence on your graphic. I mean,
Right.
um, you know,
Well,
yeah,
that's actually funny because there is divergence here. Now I'm seeing it right there. Let me take this off for a second. Right there. Honestly, it's right here. So yeah, there's some divergence here actually. So actually, this actually might continue up because that's bullish divergence.
See, that's what I was thinking too, because I'm basing my crypto entry based on the DXY, because I've noticed that every time it goes down, crypto goes up. Every time it goes up, cryptos and stocks go down.
Right. Well, if that's the case, this should be going up.
That's why
Crypto
when you said 20 cents, it makes sense to me.
Right. Well, I'm seeing it clearly now. Wow. I'm actually glad you brought up divergence, Paul, because I was like, well, now that I see that, there is some divergence here. And that makes sense why this momentum's high or heavy is getting stronger really here. So it may do a pullback first and then continue higher. I'm not sure, but there is definitely bullish divergence in here. So good call on that. I'm so proud. uh, we'll see what happens here because looking at the weekly, it looks like crap, but it could still, it could still perform. And then, ooh, wow, that's a huge C clamp. Oops, hold on. Y'all see that? This is a gorgeous C clamp. This is like picture perfect C clamp. So if
What
this
does
is
that
the
mean?
case, this means that price usually wants to pull back up to the key gem, or at least halfway, which would be this fractal level here, or this fractal zone, really. Let me do this. So we might see price come up in here actually, or up here. So that will confirm, prices for the dollar going up. And then also that will confirm the crypto market crashing.
Yep. I think it'll happen by the end of the month from what I've been looking at it and like all the other data that I absorbed for no reason based
Right.
on like the news and all the narratives. To me, I think by the 22nd, from like now to the 22nd, maybe the 23rd, the latest is when I think it'll go down.
Right.
But I'm not an expert. That's on you.
Got you. Well, this monthly candle's looking funny, but depending on how it closes, we could definitely get that. I'm glad y'all said something on that one because that was interesting. But looking at it, it looks pretty solid to go higher on the monthly time frame. Smaller time frame, it may take a while, but we do have bullish divergence, so we'll see.
So is that would that be considered a C clamp because you've got Kijitsun flat?
What about here?
This or Kijitsun is at the bottom.
Let me clean this real quick. Yeah, this right here. Yeah. Yeah, you can still consider this a C clamp. It's just not as pretty as the other one. Because notice here, you see this gap here?
Okay.
You usually don't want that for a C clamp. Like compared to the monthly time frame, you see that it's tight together in here.
Okay.
Yeah, that's why I don't usually trade these C clamps to the downside. Not saying that it can't move lower, but I'm saying like right here, it's not as strong as what you see on the monthly time frame.
If you look at it on the weekly, it had a bearish cross, but the price kept going up. Now it's in the cloud.
Oh yeah, that's true.
That's what kind of tripped me out too. Right now, I'm like, wait, shouldn't it be going down? But it keeps going up.
Oh, but look here. One thing. Chica spans above Kijun. So if you see this, because you have a bearish crossover, bullish Chiku span, bearish price. So this just telling you already that market does not know what it wants to do on the weekly time frame. So you can't go off the weekly time frame. Now what you can do is this. Find the pattern of the market. Actually, let me clean this up. Find the pattern of the market on the higher time frame, and you'll know what to look for potentially. Do we know what this pattern is, everybody? It's actually a
Bear flag?
huh?
Bear flag?
No, it's a bullish pattern, but it's a wedge. It's a bullish wedge.
Oh.
So if
It's a
once price,
triangle.
or a triangle, but once it breaks out of here, oh yeah, price will be going up, and you could look at this area for target or this area, and you could argue even right here as well. And this is just trading naked charts and just trading only the pattern. So we'll look at something like this. And also, you could also get your answer. Well, you couldn't get it on this one, but you might. Let me do this. Let me test it. I haven't done this before, so let me see. So yeah, you can still put fib extensions on here, and that'll get you into that one-to-one here. So that'll take us from this point and still give us an N wave right there. Because price is still moving up, but on the monthly, it's just, I don't know, on the weekly, it's just creeping, but it's still moving up. So these will be your targets based off of that. I don't know about this. That's pushing it. If it does get up there, that'll be amazing. But and you could also look at it one more way as well. That W formation or double
Ooh.
bottom. Because there's so many ways you can look at a market. It's just what are you gonna do? Like if you did a trade the wedge here or this triangle formation, you probably would have looked for this. You see, this is why there's so much argument in trading because everybody sees something different. But the more knowledge you have on the market, it changes your thought pattern. Now, if you were trading Ichimoku, you'd probably be like, well, the market is, you know, consolidating here, and you're still overall bearish based based off, the rules of Ichimoku, you're still overall bearish. But one thing that's changing that is this Chiku span. Chiku span changes the rule of everything. That's why I say this is the most misunderstood line. if you understand Chiku span and the significance of the Kijun Chiku span crossover, that's gonna save you a lot in your trade because now this could technically turn into a bullish market just because of this. Now if it dips back underneath, then you're back to this something like that there. So that's why when you trade Ichimoku, you have to have a lot of patience because Chiku span is gonna save you from a lot of good trades or save you from a lot of bad trades and help you get into good ones. So right here, we want to wait to see how this weekly candle closes because the week could still close underneath here, underneath the key June, and then you'll be back to looking to go to the downside. So a lot could happen just in this one spot. That's why the market is in such a weird place right now because the dollar could either go down right now or go up, just like the crypto market could go down or go up right now. So it's wise to keep a watchful eye on the market, and I'll explain even more because if you go to XRP or Bitcoin, let's use Bitcoin for example. Bitcoin weekly chart. Notice what's happening here. What's that?
We're in price.
Yeah, Chiku. Oh my goodness, Chiku's in the candle. So this market's ranging between this and this. So, but we have a death cross right here. But here's what's gonna happen. Notice that the Chiku span is starting to creep lower. So once Chiku span gets underneath here, that's underneath price. That's a Tinkerson cross. That's saying the market's gonna get more bearish. But once it crosses underneath the key June, it's over. So that would mean, let's say the market ranges a little bit and it's right here. That'll put the market right underneath the cloud and we'll see the market drop to something like this. Y'all understanding how important that Chiku span is? Chiku span is like the black sheep of the family. No one pays attention to it.
That makes sense. They actually, so it's better to put more attention to it.
And you
Actually, yeah,
know
that makes sense.
exactly. And you notice how it's on the weekly time frame, how it's big. This is Bitcoin too. If we
Yep.
look at we look at XRP. XRP is not doing that yet because it's slower compared to Bitcoin. I don't know why when it comes to charts. But notice here that it's starting to creep closer to the price.
Yep. It's about a cross up there too.
And it all but when it dumps or pumps, it moves very hard. So we're gonna see Chiku span look something like this or something like this to the downside. It's either gonna be a long stride up or a long stride down. So whatever Bitcoin does, we're gonna see Chiku span follow. What's that? Here it is. We're gonna probably see something like this, a straight Chiku span down like that, or a straight Chiku span up like that. But right now it's looking like it's gonna want to come down just because Bitcoin's getting weaker. See that how Bitcoin's getting weak here? Now, if it bounces here, it's gonna have to clear clear above this anyway. So you might want to check the lower time frames to see what happens there. But that's why you have to you can't be greedy in this trading market. You have to take profit at some point because market does not play how you think it's gonna play.
Yeah, you're right. Because on the lower time frame, it already crossed, and the price is already Chiku span's already in the candles
Right.
on the daily. Yeah, dang. So would you recommend basing your trades off the weekly, the monthly, or the if you're gonna do a swing trade, or is that from the 4 hour?
This is the weekly, but I'm saying if like I said, you could trade the time frame. I'm gonna show y'all in a second, but you could trade any time frame the same way from what I'm telling you. But if you're gonna trade the weekly, you have to have a lot of capital first of all, and then not just that, you have to have good risk management. If you're 80xing on a weekly time frame, you're gonna lose your whole account.
Oh yeah, that's all bad.
Like that's not even wise at all. I would not even suggest. You know, if you had like $1 million, then what I say doesn't even matter. But you know, for this situation, if you're trading on a broker, yeah, then yeah, you're definitely not gonna make a good decision there. You probably want to trade like a small lot size, like a O2, catch
Mhm.
all that, or point oh 0.02 and catch all that, or point oh 0.01 and catch this whole thing. Now that's not bad. It sounds like it's a small lot size, but with that small lot size, you could literally make like I would say 5 figures plus off of this, depending on if you keep stacking. Like this whole thing here, you could have made some your yearly salary from this trade using a small lot size too. Because look how many pips that is. That's 49,000 in 24. So using a small lot size, I think per lot for Bitcoin is like equivalent to $3, I think, or more. Which actually might be $6 because it's actually worth more than gold and oil right now. Uh, hold on, let me check real quick. How much is that per pip? Let me check. Okay, so if you put in a point oh 0.01 and you bought in, it's actually $7 per pip. So yeah, you would have made quite a bit from here, and that's using a small lot size too. So you could have really caught some. You would have made actually more than what I was saying. Do $7 times this number right here, and that's what you would get. Yeah, so you would actually been you would have money to go out for a while. But that being said, uh, that's literally what you would do. So if you were trading the same strategy on a smaller time frame, let me just pick one. Uh, let's go XLM and let's go like an hour time frame. So for instance, if we're looking for a trade here, we're gonna use this one as an example down. So we found our bearish TK crossover. All right. So we see that price is underneath the cloud here. So we see that it's going down. We don't have a support level or a resistance level yet, but we have one right here. All right. So we have our trade there. We have bearish price action. We would take this trade down to here because look what happened. We got support right there. And you see the market went back up. We're still bearish though. So we could look for another bearish opportunity right here. Bearish engulfing candle. We see price drop. Price came back to this level again. Moved up. We could still short this market. It never had a bearish TK crossover, a bullish TK crossover. It almost did right there, but it didn't. Right here, here's our next trade right there. Take that trade down. Still haven't had a bearish TK crossover. Here's our next trade right here. Actually, it's right here. Put our entry there. So the market comes down. You definitely want to take your profit somewhere in here because right here it went up and you would have lost all your profit. So, but you still caught some good trades all the way down from that point. But that's just using price action with Ichimoku and just watching the market. Very simple concept. Is just you're not gonna win all of them. Your chances get higher when you still have a bearish TK crossover and prices underneath the cloud and you're at a level of support or resistance, which is your Tinkerson, Kijisen, or Kumo. All right. Or fractal. Because notice here it came back to these fractals on this one. Because what happened? price broke the fractals here. All right, let me explain this before I go ahead and stop. So price broke the fractal level here at the initial breakout, came back to retest it here, broke down, came back to retest it again, broke down. This is the next fractal level right there, came back to bounced off fractal level, came back, look again, came back to this fractal level, bounced off this fractal level, came back down. Okay, notice here, came up to this fractal level here, but it never bounced here. It actually broke above, and then it broke this bullish fractal to the upside. So really study these fractals. I'm telling you, these will change your trading immensely. They may be difficult at first, but if you can find it, the initial fractal breakout, you can get an idea where the market's going to go before then. Any questions, concerns, comments, thoughts?
This is probably a dumb question, but I'm trying to figure out how to set up that fractal thing on TradingView. I never used them, and I'm trying to set them up. Where do you hit or what?
Oh, let me give you the code. Put your email or send me your email just in Discord, and I'll send it to you because this code is super long. It won't let me send you the code. If y'all want me to send y'all the code for this, send me y'all's email address, and I'll go ahead and
That's a lot of code.
Yeah, it's a lot of code. Yeah, it won't let me send it on Discord unless I upgrade Discord. I don't feel like upgrading Discord
Nah,
right
it's a waste of money.
yeah, like not right now. let me get like 1,000 people in here. I might do that. But for now, no. If you want to, okay, so you just sent it. Okay, great. So I'll
Yep.
send it to you. I'll send it to you right after I close class out.
Thanks, brother. Appreciate it. One of my buddies is going to be contacting you too. He said stop by and kind of watch a little bit, and he's interested too.
All right, sweet. Sounds good. Sounds good. Sounds good. But yeah, if you guys have any questions about today, uh, ask them now. If you don't have any questions, I'm gonna go ahead and close out class. I'm gonna stop the recording